Hey there, and welcome back. So, you've learned the alphabet of the market, right? You know what a single candlestick means, the body, the shadow, the color. That's awesome. But today, we're going to go from reading single letters to reading whole sentences, even entire stories. Let's get into it.
Because that's really all candlestick patterns are, you know? They're a visual story, a story about the constant battle between buyers and sellers. And once you learn to read these formations, you can start to really understand the psychology that's driving the market and get a much better idea of what might be coming next.
But hang on, before we start decoding all these patterns, we have to ask a really important question. Why do they even work? And the answer, you might be surprised, has very little to do with complicated math or algorithms. It's all about us. It's about human emotion. Markets move in these cycles that are basically just driven by the collective feelings of millions of people.
I love this quote from Tower Point Wealth because it just hits the nail on the head. We all know the goal, right? Buy low, sell high. Simple. But our own psychology, our own human nature constantly trips us up and makes us do the exact opposite. This quote really frames the whole challenge of trading, doesn't it? It kind of suggests the first thing we have to master isn't the market, it's ourselves.
And here are the usual suspects. You've got herd mentality, FOMO, fear of missing out, that makes us pile in right at the top. Then there's loss aversion, that painful feeling that makes us panic sell right at the bottom. We get fooled by recency bias, where we think the current trend is just going to last forever, and of course confirmation bias, where we only pay attention to the information that agrees with what we want to happen. It's this all too predictable and frankly very costly emotional roller coaster.
So, how in the world do we cut through all that emotional noise? Well, we use a tool that was literally designed to track it, and that tool is candlestick analysis. It's the language we can use to read all that market emotion. And get this is not some new high-tech invention. This system was developed way back in the 18th century by a Japanese rice trader named Munehisa Homa. He figured out that the price of rice wasn't just about supply and demand. It was driven by the emotions of the traders themselves. So he created candlesticks to track that emotion, and legend has it, his methods made him an absolute fortune.
So what is a candlestick pattern, really? Well, to put it simply, it's just a specific shape or formation of candles that you can learn to recognize. And that formation gives you a clue, a signal that the psychology of the market might be shifting. It's a hint that the balance of power between buyers and sellers is changing, and that helps us make a much more educated guess about where the price could be headed.
All right, let's start with the really dramatic stuff, the patterns that signal a total plot twist in the market story. We call these reversal patterns.
Believe it or not, a single candle can tell a powerful story of rejection. Take the hammer. You'll find this at the end of a downtrend. You see that long lower shadow? That shows sellers tried to push the price way, way down, but bam, the buyers stormed back in and drove the price all the way back up. It's a huge sign that the sellers are getting exhausted. The shooting star is just its evil twin at the top of an uptrend. Buyers tried to push higher, but sellers slapped them back down, sending a clear warning that the party might be over. Now, let's look at patterns that take two candles to tell their story. The engulfing pattern is just a pure power play. In a bullish engulfing pattern, a small, weak-looking red candle gets completely swallowed up by a big, strong green one. It's like you're literally watching the buyers wrestle control away from the sellers in real time. And as you'd expect, the bearish engulfing is the exact opposite. It shows sellers totally overwhelming the buyers, and it's a huge red flag that the price might be about to turn over.
And here's what that looks like on a chart. So you see that little bit of upward momentum, that small green candle, and then the very next candle just completely dominates it. It might open a little higher, but then the sellers just take complete control, pushing the price and closing way below where the last candle even started. That is a seriously powerful signal that the whole mood has changed.
Some of the most reliable patterns actually tell a story over 3 days, or 3 candles. The morning star is a perfect example of this. It's a bullish reversal pattern. First, you get a big red candle continuing the downtrend. That's Act 1. Then, in Act 2, you get this tiny little candle that shows indecision. The selling has basically stalled out. And then, for the finale, a big, strong green candle confirms that the buyers have taken over the show. The evening star is its bearish twin that you'll see at the top of an uptrend. It's the same 3-act story. Certainty, then indecision, then a brand new certainty in the other direction.
Okay, but patterns don't always signal some huge dramatic plot twist. Sometimes they just tell you that the story you're already in
is probably going to keep going.
The Rising 3 Methods pattern is a classic example. It's the story of a pause, not an ending. So first, you get this long, strong bullish candle showing the uptrend is in good health. Then, the sellers try to fight back with a few small red candles. For a second, it might look like a reversal is starting, but look closer. They don't have enough power to even push the price below that first big candle. It's just some people taking profits. And then, a final strong bullish candle comes in and confirms the buyers easily soaked up that selling and are ready to push higher. The market just took a quick breath before continuing the climb.
So now you can spot some of these key patterns. But listen up, because this is without a doubt the most critical part of this whole thing. A pattern by itself is just a hint. It is not a command to buy or sell. You have to learn to read it in context. Look, spotting a hammer pattern is one thing, but spotting a hammer pattern that shows up right at a major support level during a small pullback in a much larger uptrend and with volume picking up, that's a whole different ballgame. That's not just a signal anymore. That's what we call a high probability setup. So the biggest takeaway here is to always look for other clues to confirm what the pattern is telling you. And honestly, this is the best context you can ask for. The most powerful signals almost always happen when you trade with the overall trend, not against it. You can see it right here. The idea is to identify that main impulsive move, that big push in one direction. Then you just patiently wait for the retracement or the pullback. A bullish reversal pattern appearing at the end of that little pullback is your prime signal that the main trend is about to kick back in. It's the classic strategy. You're buying the dip in a strong uptrend. And finally, there's volume. Think of volume as the market's lie detector. It tells you how much conviction is behind a move. So if you see a beautiful bullish engulfing pattern, but the volume is super low, it kind of suggests there isn't much real power behind that move. It's weak. But if you see that same exact pattern form on a massive spike in volume, that's a huge confirmation that a real shift in power is happening. High volume validates the pattern. It tells you the move is for real. By learning these patterns, you really do gain a massive edge in understanding the market's psychology. But like we talked about at the very beginning, the final challenge isn't just about reading the chart. It's about reading yourself. The patterns can give you the map, but you're the one who still has to navigate your own emotions of fear and greed. And that, right there, is the real journey to mastering the market. Thanks for tuning in.